Hello everyone, welcome to this session on Accountancy, Grade 12 of NIOS. Today we will be beginning with the Chapter 1, Accounting and Introduction. In this video, we'll explore some of the basic but very important concepts of accounting. So let's get started and build a strong base in accounting. Let's start with some quick reflection. So how does your family record expenses? So how do they record it? So monthly expenses, they are going to list it out. Have you ever bought something on credit? How do businesses track money? So how do they track their income and expenses? So by the end of this lesson, you'll be able to learn the meaning of bookkeeping and accounting, differences between bookkeeping and accounting, branches on objectives of accounting, limitations and advantages of accounting, uses of accounting information, and also some of the basic accounting terms. So moving further, let us get into the main focus of our video, that is meaning of bookkeeping. So what is exactly bookkeeping? See, bookkeeping is a systematic way where the business transactions will be recorded in a day-to-day basis. So every day the transactions will be recorded. So only it is also called as a permanent record of business transaction, where business is going to keep its transactions permanently. So bookkeeping is the first process. So next, let us learn what is the basic meaning of accounting. See, accounting includes recording of business transactions, where every day's transactions will be recorded in a systematic manner, and then they're going to classify them into proper heads. Proper heads in the sense all sales comes under one head, okay? All purchases, all assets, everything will be classified in the proper heads. Then they are going to summarize into the proper statements like profit and loss account, balance sheet, and at the last, it will be going to interpret and communicate the results to the user. So ultimately, the accounting information should reach to the users. So next we have differences between bookkeeping and accounting. So we have few differences. What is bookkeeping nature? What is the nature of bookkeeping? So what does it do? It is going to just record and classify, whereas in accounting, we are going to summarize and we are going to interpret. Then the information will be given to the users. So what is the main objective of bookkeeping? So bookkeeping, it just records the transaction in a systematic mannerism, whereas accounting, it helps us to find out the profit and the financial position. The scope of the bookkeeping is very limited, where accounting is wider scope. So knowledge to enter, okay, the transactions in the bookkeeping, basic accounts knowledge is required, whereas to find out the profit or loss or to prepare the balance sheet, the depth knowledge is required by the person. Bookkeeping is the first stage, okay, the first step, whereas accounting is like where bookkeeping ends, okay, accounting begins. So now let us learn what are the branches of accounting. We have different branches of accounting, but these three are the main branches of accounting. So what does financial accounting says? See, financial accounting records and shows all money related activities of a business. It helps us to prepare reports like profit and loss account and balance sheet. Whereas cost accounting, it finds out the cost of making a product or service. So it helps in controlling and reducing costs. So whereas management accounting, it gives useful information to managers and helps them to take good decisions for running a business. So next, we are going to learn what are the objectives of business accounting, okay? See, the first main objective of accounting is to maintain proper record of business, okay? Every business should record the transaction. So accounting helps to maintain the records in a proper mannerism. And also, accounting helps us to find out the profit or loss of that particular accounting year. It also shows the true financial position. By looking at the balance sheet, we can identify how good the company is, and also it gives the information to all the interested users. We have advantages of accounting. See, the main advantage of accounting is to know the financial position of the business. By looking at the balance sheet, by looking at the assets and liabilities of the balance sheet, we can come to know what is the financial position of the business. And also, it replaces memory. See, in business, number of transactions are going to take place where every transaction can't be remembered by the accountant. So then and there itself, he keeps on entering. So it will be helpful. So that is how it is going to replace the memory. It will be acting as a documentary evidence. It is like a proof in the court. And it also avoids the errors and frauds in the company. So whenever the accounts is maintained, it is a prevention of the errors and frauds. And also it helps management to take some good decisions in the business. On the other hand, we have limitations of accounting also. So accounting shows information in monetary terms. Okay, so in accounts, we are going to enter the transaction only related to the monetary terms, whereas non-monetary terms which will not be reflected so easily. And it often relies on estimate. Sometimes in accounts, we are going to estimate the life of the asset. So at that time, we can't rectify what is the actual value of the asset. Also, profits alone can't measure the business performance. By just looking at the profits in the numbers, we can't come to the conclusion, okay, the business is running good. These are some of the limitations we have. Next, we have to learn who are these users of accounting information. So this accounting information users is classified into internal users and external users. We have internal. Okay, so who are these internal users? So internal users are the individuals within the organization. So they belong to the organization like managers, okay, employees, management people, owners. They all belong to the internal users. Then who are external users? External users are individuals or organization outside the business. Okay, it may be government, it can be bank, it may be investors, creditors, general public. Okay, so they all belong under external users. So this accounting information should be given to both of them, both the internal users as well as the external users. Next, we'll move to the very important concept, that is some of the important accounting terminologies. In that, first we are going to learn what are assets. Okay, assets are nothing but what a business owns. Okay, usually assets will be having tangible asset, intangible assets. Okay, so assets are nothing but what business owns. Example, we have buildings, we have computers, we have cash, we have land, machinery. This all comes under the category of assets. Moving further, the next concept we are going to learn about the liabilities. Okay, so what are liabilities? So what business is going to pay to others? Okay, so let us try to understand this liability concept with one simple example. Okay, let us imagine there is a bank. Okay, so there is a bank. On the other hand, there is a business. There is a business. Okay, business is taking loan from the bank. Okay, let us imagine some 10 lakh loan has been taken by the business from the bank. So what business should do? Business should pay back. Okay, business should pay back this loan to the bank. That is what liabilities concept says. What a business owes to others, business has to pay to the outsiders. Okay, sometimes the business would have been taken some money from the outsiders. The business has to pay those money back to them. That is liability. A simple example, we can consider it as loan concept. Moving further, we have something called as capital. So what is capital? See, capital is nothing but owner's investment in the business. So owner, okay, the person who is going to start the business, he will invest some money in the beginning stage. For that, we call it as capital. Next, we have expenses. See, expenses are the cost is incurred to earn revenue. So to earn the income, okay, to earn the income, there will be some costs, okay, which is going to be in the form of expenses. To get income, so the business has to spend some expenses that will be termed as expenses, costs incurred to earn revenue. Then we have something called as income. The income is nothing but revenue minus expenses. So when we get the differences, okay, revenue minus expenses, it will be termed in the form of income. Next, we have profit. So profit is nothing but revenue will be more than the expenses. Okay, so when we compare with expenses and revenue, so whenever our revenue is more, okay, it will be termed as profit. Where should our expenses should be less. Next, we have loss. See, loss means when expenses exceed revenue. Okay, so whenever our expenses is more and revenue is less, it will be termed as loss. Okay, so one more important concept we have, that is debtors. Okay, see, debtors are nothing but people who pay money to the business. So let us try to understand this concept with one simple example. So imagine there is a business. Okay, there is a business. So on the other side, there will be some suppliers. Okay, so there will be some suppliers. So what does it say is people who pay money to the business. See, this supplier, okay, so business has sold some goods to them. So business has sold some goods to these suppliers, but they have not paid the amount at that particular moment. So they say that we are going to pay later. Okay, we are going to pay later. So that is what we call it as on the basis of credit. Okay, so they are going to pay later. So now business has to receive this amount, right? So this suppliers are going to pay amount to the business. That is what debtors concept says. People who pay money to the business. Okay, so the outsiders who are going to pay money to the business, that will be termed as debtors. Next, we have creditors. Okay, creditors means people to whom the business pays money. Again, I can take one very simple example. Okay, so how business is going to pay money to the outsiders. A simple example we can consider about bank loan here. Okay, see, business is going to pay bank loan. Okay, so that is business is going to pay money to the outsiders. That is what creditors mean. People to whom business pay money. Next, we have stock. So what is stock? Stock is nothing but goods which are available in the business for the purpose of sale. And we have OCHR. See, OCHR is nothing but it is one of the document, okay, which will be acting as a proof. Okay, a simple thing, I can just put it under bill. Okay, it is nothing but a bill. It is one of the document for every transaction. It will be acting as a proof. Then we have something called as discount. Okay, discount is nothing but reduction in price. So we have two sorts of discount. One is trade discount, one is cash discount. Trade discount is whenever it will be purchased on the bulk, the discount will be given. Cash discount is on spot, they are going to give the discount. Next, we have drawings. Okay, see, drawings are withdrawal of cash or goods by the owner for his personal use. So, when the owner is withdrawing some money from the business for his personal use, like paying his house rent, okay, that is his personal expenses. He is using the business money for personal use. Whenever he withdraws some money from the business for his personal use, it will be termed as drawings. So we have one more concept, that is accounting period concept. See, accounting period concept or accounting period is nothing but it is a specific time span for which financial records are prepared. So it should contain 12 months. So we will be following the accounting period like it is going to start from 1st April of the year and it is going to end on 31st of March. So let us pause and think. Why do you think accounting is called the language of business? See, like other subjects, okay, like we communicate with one language. So, example, we communicate with English. Likewise, if we want to communicate in the terminologies, okay, the finance terminologies, we use accounts. So, it is called as a language of business. So, you can think a disadvantage of business does not keep proper records. See, if a business is not keeping a proper records, it will not be able to identify its proper profits, how much loss they have incurred, okay, what is their income, what are their expenses. They can't take good decisions at all. So what we learned in this video? So we have learned meaning of bookkeeping and accounting, difference between bookkeeping and accounting, the different branches of accounting, objectives of accounting, advantages and limitations of accounting, who are the users of accounting information, and some important basic accounting terms. So now it's time to check your understanding. So list out what are the differences between bookkeeping and accounting, and also who are the internal users and external users of accounting information. You can give examples here. With this, we come to the end of the video. Thank you for watching. Let's catch up in the next video. Until then, happy learning.